Hi, my name is Parmesh Shah and I am the lead rural development specialist with the Agriculture Global Practice. Today I am going to talk about chronic problem which is facing the poor, which is the financial exclusion. All over the world, only 35% of the poor have bank accounts and do not interact with formal financial institutions like commercial banks as the people in the developed world are used to. They neither have the bank account, nor they have a credit history, nor they have a credit line, or they also do not get other financial services like counseling and insurance and other kinds of services. Now, this financial exclusion has led to a lot of poor people not able to really grow the economic opportunities which they have. I'll today tell you about the financial inclusion efforts which have been done through the bank supported programs in rural development and rural livelihood area in about 13 states of India. This program is being undertaken with 25 million women, and it really is designed and is aimed at bringing them in the financial market space. Now, what are the things which are done to enable this to happen? First is that you need to mobilize poor people to save themselves. They need to create a financial track record so that the financial institutions start considering them as risk-worthy clients. In absence of credit history, poor are not able to interact with formal institutions like banks and others. So what this program does is that it provides a platform for poor women and households to channelize their household savings into very simple tools which are then available like village banks. So each village creates its own bank and a savings and loan association, much like the credit union we have in the bank. World Bank itself has a credit union of all its employees, and most of the bank staff do not borrow from the formal market but from this credit union. In the same way, these 25 million women have formed thousands of credit unions at the village level and have developed their own financial capital base. This financial capital is not parked in households in their own place, but they are parked in commercial banks. Commercial banks, when they have this $1 billion of their own savings, they are then starting to look at these women as clients. Now, what do the banks do with this saving? The banks and the projects which the World Bank is supporting have helped develop microcredit planning methodology along with the banks, in which each village association develops a microcredit plan, which is the 3-year, 5-year credit plan of what the credit needs of those households would be. This includes consumption needs, this includes needs for productive purposes, this includes the investments required for opening new businesses, bringing new crops into cultivation, buying new dairy animals, or starting new enterprises. So what it does that it enables the household not only to manage the current cash flows, but it allows the households to look at investments which they want to make over the next 5 years. Now, these credit plans are then appraised by both the higher level community institutions, but also by the commercial bank managers. And with those plans being appraised, the groups get a credit line from the banks, and then this credit line becomes the investment window for the poor people. Now, the total amount of resources which these banks have been able to give because of these financial plans being available is almost $14 to $15 billion. I think this has been the largest program world over where poor women have been invested in such a large way. And the impact of this has been that number of new enterprises, almost millions of small enterprises, new retail shops and food enterprises and small enterprises which involve providing services at the local level, mom and pop shops have opened as a result of this, which has resulted in almost $1,000 annual income to many of the households. So the average income has almost increased by 50% as a result of this financial inclusion initiatives. The second important initiative is the use of ICT. Mobiles are being used very actively all over the world, and poor people's ownership of mobiles is also increasing. So rather than having a conventional model of a brick and mortar building of a financial bank where people have to queue in to get loans, there is mobile banking which is being tried out through these institutions. These institutions apply for their loan using a mobile, and they receive a response on the approval of the loans within 3 to 4 days also on their mobile, and they just have to take that approval to the bank, and then they get credit being released into their accounts. So what it is doing is that it is allowing millions of small account holders not to be constrained by availability of physical facilities. They can use technology to really access services in real time, and some of these households have now used technology also to provide biometric based services to various kinds of people, like the payments of social security, pensions, public work payments, by recording biometric records of each of the household, and these biometric records are then used to transfer payments very fast to their accounts. A lot of elderly, a lot of pensioners have started getting these resources in a very effective manner, thus rendering the financial inclusion very effective. Another innovation which these programs are doing is provision of life and crop insurance services using an ICT based platform. Moment a death happens in the family, they have a call center to which they can call, and a person comes and appraises what's happened to the household in a mobile way within 2 to 3 hours. The money gets transferred into their accounts, and they have ATM cards by which they can get money for funeral expenses, and also money gets transferred of life insurance money within 1 month to their account. Pervasive use of technology to deliver services, financial services at the last mile, is another very important application which is being tried out in these programs. Creating an ecosystem for financial services is very critical for rural poverty reduction. A number of times rural people have aspirations, ideas, need for resources, but because financial resources are not provided in time, the households are not able to make this investment. Sometimes they have to borrow from informal sources like moneylenders in India who charge 120% interest rate. These lend these households to become debt ridden, and they are perpetually then in poverty and are not able to pay the high interest rates. Creating a financial ecosystem of inclusion and a range of financial services around them enables the household to dynamically participate in the financial market and increase their income on a sustained basis. So the three things which everyone should take away from these investments is: start small. You can start with poor people's own savings. Poor people have strong capacity to save. Help them develop a financial management system with their own money. Second, provide them skills of financial management so that they can do planning and deal with commercial institutions like banks in an aggregate way. Third, use information and communication technology to reduce transaction cost and also reduce inefficiencies in accessing financial services. Fourth, accompany these services through financial literacy and counseling so that people are able to understand the financial flows and their repayment capacity, so that they are not over borrowing and are able to really use credit productively to improve their incomes. Thank you.